As with any business, they are required to make any disbursements of cash with an electronic transfer or check to ensure that the company's cash outflows are correctly and accurately monitored. However, there are times where the business is required to make insignificant purchases, such as office supplies or mail stamps, which do not require a transfer or check. Therefore, businesses utilize an internal cash control method, petty cash fund. A petty cash fund is a small amount of cash kept within the building that employees have access to, but under the guard of the custodian. Employees are able to access this fund and pay minor expenditures that are otherwise too small to be worth the effort of traditional procedures. This operation involves 3 steps: establishing the fund, making repayments from the fund, replenishing the fund. Establishing the fund. A check for the desired amount is cashed and placed under the care of the custodian. Documentation is then made through journal entries. This is an example for Paul's Potting Palace that cashes a $100 check to establish the petty cash fund. This is the following journal entry. Making repayments from the fund. Employees access this fund and use it in one of 2 ways. 1. Take cash to make payments. 2. Reimburse them for payments personally made. As journal entries are only made when the fund is replenished, the custodian must collect all the receipts for the transactions. Replenishing the fund. The remaining cash is counted so the company can write the correct check amount to bring the balance back to its original. Receipts are then collected and recorded for documentation. This will be the following report. On the off chance that mistakes were made during this process, we are introduced to a new account. Cash over and short. When the fund is being replenished, the amount needed doesn't always match the amount seen through the receipts. This is where cash over short comes into play. This is a temporary account that handles either the debt or credit balance depending on the situation. The debt balance increases expenses while the credit balance decreases expenses. This example shows Paul's Potting Palace Petty Cash Fund Replenishment Report, revealing the error of mismatched figures highlighted in red. This has been a screencast presentation for Petty Cash Fund for 2016 Accounting for Business Decision A.
Created using Powtoon.